If you're like me, you're constantly looking at the currency charts, looking for an opportunity, a setup that will give you the chance to trade. Now, in my first video, I talked about using a simple 200 period moving average to give you direction, and that's really simple. So what I'm going to do is show you this technique in real time. This is a chart of the US dollar, Canadian dollar, and let's put in the moving average. Okay, so that's a 200 period moving average. You can see how price has stayed above it for almost all of this uptrend. So that trend was very powerful. Now, we don't know, is this a sideways correction, or is this market going to continue moving to the downside? So we now know, because we're breaking through the 200 period moving average, that the potential is for this market to either go sideways or to move downwards and make a decent retracement. So what I'm going to do is I'm going to enlarge this last section, and you'll see how I work out how we can make a trade or not. Well, as I can see, the 200 period moving average is not really being respected by price, so that straight away tells me that I'm probably in a range. So let's see if we can border the top of this range. So putting a trend line up here, one here, and we can put that down to there like that, and let's just adjust that to catch those swings. Okay, so it's caught those swings there. I'm reasonably happy with this trend line, and then we come down. Let's put this one here, which looks like a good fit. Okay, so we can see that price is virtually bounded by these two trend lines that I've just drawn. We don't know, of course, will price move through here and upwards? Of course, this could just be a 1, 2, 3 correction, and then price could go sailing on up. You as a trader don't know what's going to happen. So the only thing you can control in the market is risk and your selection of trades. So this is what we're doing. So the next criteria for me is this trade worth taking? Is there enough potential money to be made to be worth the risk that I'm taking on this trade? Well, let's find out. The first thing I'm going to do is just copy the swings it's made down on a hourly chart, and we'll just put them on the high up there, and I'm going to copy this swing down, and all we're doing is just picking up former swings. This is what this market has been doing recently, so there's a good chance it might just continue doing that, unless of course there's some really crazy news out that's going to propel this market skywards. Okay, so what have we got here? Well, let's say that this market does descend, then how many points could I possibly make out of it? Well, you can see that even if it copies that swing there, that's 113 points, and if it takes this swing, it's 120 points. So as a trader, now I have to figure out where's my risk and where am I going to place my stop. Well, if we're right and this market's going to descend from this point here, then it shouldn't take out this top. So that's the top that we would say it shouldn't take out if it's going to go down. But as markets tend to move in pushes and then retraces, I wouldn't really want to see this market take out this second swing here. And even though the zigzag tool has drawn this swing in such a way, I actually can see visually that this swing here is actually the higher swing. So what can I deduce from that? Well, firstly, if this market's going to go down, if it's a correction, then it shouldn't really take out the bottom of wave 2, which we're going to label here. Let's say that this one is 2, because we're not sure. That's actually the highest high there, so we'll say that that's swing 2. Now, if, and it's a big if, we don't know, the only thing we can control in this trade is risk. So could it be that this market's going to go down? Well, if it does, it shouldn't really take out swing 2, so we straight away know where our stop is. Let's measure that distance. We'll stop on that trade would be about 35 points. And of course, we're not going to hold our stop at 35 points once this trade gets underway. We will actually start to bring down our risk. But initially, this is our risk on the trade, 35 points. So the question I have to then ask is, potentially, is this trade worth taking? i.e., can we make double from this trade to what we're risking? So let's measure this distance down and see how far we've got. Well, you can see that that's a good 120 points to the downside. What happens if it only comes down 50% of the way and then goes up? And that's something that does happen as well. So let's copy that and put that around 50% of the way, and we'll measure that from here to here. Well, that gives us 64 pips. So that's not quite 2 to 1, but it's close enough for me to take a trade. So this is potentially a valid trade for me. It has all the criteria that I'm actually after. We have already an established downward direction. We're in a descending channel. We have a risk reward of 2 to 1 or greater, and the potential is that the trend that was in place is now weakening, and we should be prepared to look for a movement to the downside. So what do I do now? Well, I don't want to sell a market that's going up, because that's just crazy. We want to sell this market when it actually tells us that it's ready to come down. And how will we know? Well, there's two ways that we can do it. One, we can simply place an order under this low of this last swing up here, because so far this has been the swing high. And if we do that, then we simply place our stop up here. Now this will give us a slightly bigger stop, about 42 pips. Not too concerned. The reason I'm not too concerned about using a slightly larger stop with this trade is because the market's going to have to give us more of a signal that it's going down. I could place a trade where it is, but this market could continue to blow through this trend line and just move on up. So the way I'm playing it is I'm looking for the market to give me confirmation, and I'm prepared to pay for that confirmation by using a slightly larger stop. So that's the trade, that's the entry, that's the stop level. Of course, I'm not going to get entered into this trade unless this market comes down. So let's come back in a couple of hours and we'll see what's happened.